Okay, guys, another session on the Haven. So what's the date today? 23rd September. So the first thing that we've seen happen in the week is there was big news about banks and the high drama that came out from the banking sector with I think it was over $1 billion in terms of fraudulent money transactions that have occurred. So I think that's actually impacted the market very early this week. We can see that on the share prices of HSBC. That's one example. You can see the banks literally are falling to pieces as it stands. Same with Deutsche Bank. To be recovering, it's just you can see the massive gap on the weekly chart here. Same on the daily. So I'm assuming this is all being caused by the, like I said, the big news that came out on Monday. Also, if you look at Goldman Sachs, which has been one of the strongest performing banks, we can see what's happening here. So, yeah, to start off with the week, I think the biggest news of the week is this shit happened really has caused a lot of pressure in terms of banks selling off. Added to the fact that the USA has now seen over 200,000 coronavirus cases and deaths. Combine that with what we have.
Whose layer is that? Sorry, EXO.
Good. Combine that with what we've got in the UK. We've seen 7,000 cases on a weekly basis in the UK over the last 2 weeks. And in my opinion, it's only gradually going to get worse as well. And so, yeah, I think the pressure is on again in terms of the COVID, in terms of what's coming out from the banking sector. So what does that mean? Potentially, we have a risk-off situation, sorry. So, now, elections are 30, 45 days away now. There's a lot of uncertainty in the market. I did mention something early in the week or last week that we should see a pickup in volatility. As for the direction, I'm not too sure, but I think we are seeing very early direction. Now, every market is suffering. The only market that seems to be holding up is tech stocks. Every time they sell off, somehow shake the dust off and bounce a little bit before dropping again. So we've just very quickly covered the banks. Really it doesn't look good for them.
Do you guys hear me better that way?
Can hear you.
Yeah, you're good.
Okay, perfect. Yeah,
so
I switched to my mic.
When you have a risk-off scenario, you're going to see strength in the dollar. Always a safe haven, what people move into. And I think a few weeks ago, I talked about a scenario where we could see potentially a descending broadening wedge, which looks to be literally playing out in terms of textbooks. Some people classified it as a channel.
Yeah,
could agree that was a channel as well. So that added just more confidence to the fact. I also mentioned, I think in the previous talk last week, that if you look at the monthly open price, opened, traded below the monthly before closing back as a bullish pin bar. A higher time frame is a very strong signal of a potential reversal. Got the confirmation on the second close of the candle, and the market pushed away. This is essentially a classic textbook type of pin bar, the confirmation and push up. What is key here? Let's just get rid of everything. There's a break in markets.
The thing with dollar is that it's almost back. It's almost already to one of my what would be one of my first take profit area. I shared my perspective in the analyst AMA charts. I mean, you already know what I'm looking for, but around 24 or around 94.95. But yeah, it's beautiful the way it broke up. At first, markets haven't been reacting that much. Like yesterday, SPX and Bitcoin were not doing that much, despite dollar breaking out. But today, yeah, they all took a hit.
Yeah, correct. But one thing you have to remember is, I can understand why you've taken some profit here. Personally, I have to understand that if we look at price, okay, this has been a very consolidation period of time. We're talking almost 2 months in this range here, okay? The breakout, I'm not expecting too many pullbacks, if I'm honest with you. I do think this is going to continue going higher. Any pullbacks will probably be short-lived. Higher.
Yeah, this is what I'm looking for.
First target is around about, for me personally, I think 95.50.
Yeah, this is my second target.
Yeah, so I think that's why I'm slightly more confident that we will see much more upside, because we've had this period of consolidation, and we should now see a risk-off scenario going into the elections and an increase of volatility. So option traders will be having a great time because they'll probably be shorting stocks, but some people will be shorting stocks and logging volatility. It's a perfect way to play the markets because long vol will cover you in case the stocks do bounce, because the volatility should be there anyway. That's the dollar. As we know, the inverse of the dollar is often the Euro USD because dollar is 58% weighted.
Again, and I wanted to have your opinion on something. So, the Fed has been speaking already 2 times this week, and they have a third meeting by the end of the week. And it's one of the first times since the first COVID breakdown in March that they are speaking that much without saying pretty much anything. Like most of the meetings they had have been, in our opinion, a bit pointless. And it feels like they're just trying to speak in order to speak and to keep the market waiting for something, but nothing comes. And I think that's one of the reasons stock market took a hit later today and not at opening.
So I'm going to go into that. Into slightly more detail in terms of news. What my opinion is and what I'm understanding from the noise being made from the Fed. So let's just quickly wrap up on the euro. Now, I posted a chart. I don't know if anybody saw it yesterday. I made a comparison. So I pointed out yesterday that many people do like to make a comparison between Bitcoin and the SPX. Personally, I've been using the Euro USD because when Euro USD moves, Bitcoin moves. Why? Because, like I said before, the Euro USD is the inverse of the dollar, vice versa. Seeing how sensitive Bitcoin has been to dollar movement and dollar fluctuations. Sometimes it does lag, but it eventually cascades through. It doesn't always have to be the case. Like I said, correlations don't always work in terms of pip to pip or dollar to dollar, but you're generally looking at the bigger picture. I'm not talking about a 5-minute chart or what. I'm talking about a 4-hour chart, daily chart, weekly chart. Okay, so we can see evidence of that. In case of those of you who missed it yesterday, let's quickly.
The comparison with Bitcoin, the tweet you posted yesterday was very interesting.
Right. So if you look at the Bitcoin, you can see now Bitcoin broke before the euro and the dollar. The dollar squeezed up. If you look at this point here, the euro rallied hard at this point and crashed as Bitcoin was crashing. Now, a lot of people get the impression that I was being bearish on Bitcoin back in April, May. I wasn't being bearish. My argument was that I was looking for a pullback on Bitcoin. We weren't getting one. Everybody seeing what Bitcoin did. It just relentlessly went up. Personally, what I was looking was for something like this to come back, because Bitcoin has a habit of giving quite often a rounded retest and then pushing up.
Some sort of a bottoming process instead of just a V reversal that is quite uncommon at the end of the day.
So you can see Euro did that very nicely. Euro just died and they just consolidated. And I was looking for that consolidation to get really, really bullish on Bitcoin. So I got caught off guard. I have to put my hand up and say I was wrong. I openly admit that as well. So Bitcoin just took off. I think probably because of my ignorance that I didn't give the halving as much weight as I should have done. I think that's probably because of the fact the way we just broke down because of COVID. But nevertheless, it is where it is. Now, moving forward, we can see that Bitcoin started consolidating in this range, and so did the euro. Now, the euro started leading and pushing up extensively. It went on an absolute crazy surge. Stocks were rallying, dollar was falling, euro was rallying. I think part of the reason that you have to understand is the fact that COVID cases in America were still increasing on a weekly basis. Europe had much better control in terms of COVID, and the productivity and economy in Europe was faring much better than America. Surprisingly, we're seeing that look. If you look at the highs of Bitcoin and the highs of the Euro USD, they both came in at the same time. Because what led me to short Bitcoin around these range highs. Because if I'm wrong, I know Euro's going to go higher. I know Bitcoin's going to go higher. But the fact that Euro's breaking down, and I can see Bitcoin is breaking down. For those of you who are watching, the blue line is Bitcoin, and the Euro USD chart is the candles. If you look at Euro USD, it's starting to break down extensively. We've broken out the range. It's like the dollar. Okay. Now the question is, we've been ranging since July, August, September. As long as this isn't a deviation, I believe the pullbacks are going to be very minimal, and we're going to look for Euro to come much lower into this price level, 115, 116 level. So the question is, does Bitcoin hold or maintain its correlation, the currencies, global currencies, or does it break that correlation? I don't know, but we'll soon find out, I guess, over the coming weeks. Just to wrap up on the FX pairs, let's have a look at GBP USD again. Ben, in my opinion, is going through a rough time. I have many friends, family, I have businesses in central London, and I went to central London a few times. It's literally dead. There's nothing happening. The tubes are empty at rush hour, peak hour. 5 o'clock on a Friday, if you catch the tube in London, it is absolutely rampacked. You can't even get a seat. You probably have to wait 2-3 carriages before you can get on the tube. Last Friday, I was on the tube, literally 1/3 full. So I just think a lot of people are working for the moment. It's going to take much longer for the economy to recover, in my opinion. And the way the markets are shaping up at the moment, the economy is very disjointed. What you've seen on the markets, okay?
Yeah, and we've seen all the last few months have been the best proof that economy isn't finance. Maybe it can lag and eventually catching up, but I mean, you don't need to be an economic genius to understand that economy are obviously shitty as fuck since the beginning of COVID. Like, you don't have to be a genius to realize that nobody's working anymore. Nobody is.
Absolutely. Is there any questions from anybody on what we've covered so far?
If you do have questions, put them in the analyst AMA section. We'll get to them as we receive the questions.
Okay. Now, I've got to look at the stock market, and I was just doing some research over the last several days. I was trying to understand, why did the stock market, why did the Nasdaq, why was the Dow Jones rallying? Okay. My understanding is that the Q2 and Q3 or the monthly earnings report were much more positive than analysts expected. Okay, same with the financial reports that came out from various companies that projected levels identified of the projected growth. Many companies exceeded that, and I think personally, I honestly believe that we just saw a massive overextension in the markets. Everything was bullish. The news was coming out positive. Now, from what I've understood, I'm no expert on this, but this is just from my own research, that analysts are actually quite slightly more bullish, or I shouldn't say bullish, they're more optimistic on the earnings report that are due to come out for September, October, November, December. Now, there's a possibility that they may be over-optimistic. So what does that mean? So leading into April, May, June, July, they were under-optimistic, but yet the markets rallied higher because the earnings report far better than what was projected by the analysts. Now, I think we could see the opposite happen, whereby the earnings report are perhaps over-optimistic, and we may see, I wouldn't say a bearish leg, but I'm looking for a deeper pullback in the markets. But we'll have to see what happens. But when we look at the markets, we can see for the first time, Nasdaq has made it has made 3 consecutive down weekly candles. Same on the ES.
That's fucking ugly, mate. Wow. I haven't checked this one for a while. It's been a while since I checked Nasdaq.
Yeah, so what's important to me is, now, if we look at the ES chart, okay, there's something very, very important which isn't really being talked about. If I go to moving average, okay. So for the first time, since the ES reclaimed its 50-day moving average, well, we're back below it again. What does that mean? Potential weakness. You can see we smashed below it, reclaimed the level, price rallied higher, respected the levels. Look, we try to retest the level. Finally, it's given in. Right now, if we just identify this level here, this is going to be a tough level or a tough zone to break through.
Yeah,
but I do think we're due for a deeper pullback here.
This is exactly the level we were watching on the daily chart. The previous, this is what I was calling the previous COVID all-time high, pre-COVID all-time high. The fact that it never managed to hold as a support when it got retested early September was already a first sign of real, how do you call that? Real weakness, in my opinion.
Yep.
Because it was in confluence with daily moving averages that I use as a trend, 25 EMA and 13 EMA. And like, I cannot share it right now. I'll share the chart in the analyst EMA, but you can clearly see when the market lost its structure. And it's so crystal clear.
Absolutely. But yeah, when we talk about structure, we can see quite clearly, even on the daily chart, we've got a low. We took out these lows here, higher low, lower low. This is a shift in market structure, as you just mentioned, Pierre. Weekly, again, you have to agree that the weekly is macro bullish because a significant low here. We made a higher high. So was this just a deviation, an overextension? It probably was, yes.
Yeah.
So we are looking for buying opportunities in the stock market over the coming months. I don't think it's going to happen anytime soon pre-election. They have to wait until after election and just keep one eye on what's happening in terms of the earnings report as well as the COVID developments and how that's going to affect the economy. So yeah, that's the key level for me is the 50-day moving average on the ES. Quite often, as you can see previously, any deviations below it and a reclaim above back is a buying opportunity. This rally. So trading below it, I'm not sure what's going to happen. One thing I will often use is potentially a fib correction. Don't rule out the fact that we may see a double dip recession either. So what does a double dip recession mean? It means that, well, basically this V bottom could slowly just grind lower very, very slowly before it consolidates. How low? Again, we don't know. But I'm looking at potentially this level over here. Let me just clear my charts.
There is a nice level of confluence that is building in the 3.15, 300, 150, something like this.
Yeah.
This is where 200 DMA is now sitting.
For sure.
If you can turn 200 EMA, you can see it's very useful also on the daily charts.
50. So convert this into a 200 daily, yes?
Right, 200 daily, and it has to be a EMA.
All right.
Rather than just but yeah, basically it's one of the I've shared a new educational content earlier this week that was basically just talking about loss of trends using moving averages, which was already another piece of education I shared in June. And I used the SPX as one of the examples because it was so clean. I shared the chart in the chat for those interested.
Sure,
and you have the educational content, obviously.
That's good. That's good stuff.
Yeah.
So
so clean.
Just marking our range. Like I said, the immediate level that stands out for me is this particular range block, whatever you want to call it, level here. I'm really looking for price to really come into here. So if you look at where the market propelled, it was from this demand level. We've got a wick into it, reaction, wick, and then rounded retest and spring higher. So this was a significant down candle which pushed the market significantly higher, caused the second leg. So I am looking for a reaction if price does come into this level here. Okay. One more thing that we can do, a tool that I like using, which I spoke about previously. So let's just have a look at bands. See the weekly chart.
Well, with Bollinger on the daily, you can perfectly see the loss of the trend with the middle line, which is basically 100 MA, if I'm correct, something like this.
Yeah. Okay. Like I said, so one thing I mentioned last time is that if you're a macro trader or a position trader, you can really focus on the deviations of a weekly Bollinger Band. Now, in a tight zone like this, it's very difficult. But when you see these huge fluctuations, you're looking for that deviation. Any mean reversion back into the band is a trading opportunity for me because you generally get that end-to-end play. Look, here's an example here: deviation outside of the band, will get bearish. That's a brilliant reclaim there. Take it to the higher of the mid. And the higher. Same again. You've got this deviation of the band here. It's breaking down, coming to the mid. And like I said, there's a grey level that I marked out just slightly earlier on. We could see that pull back into there. That's where.
Are you mainly using Bollinger Bands on weekly charts? Higher time frames. You're not using them on lower time frames for scalps or things like this.
Yeah, so correct. One thing I don't do is I don't scalp and I don't really day trade as much anymore. I'm more of a I'm more of a macro positional high time frame swing trader. So I'm looking. So basically, what I try to do is build a picture of all the markets and then try to align that with Bitcoin as well. So that's why effectively, if this breaks down here, I'm looking for a pullback into the ES further lower into this level here. Okay, perfect demand zone. Price wicked off, pushed higher, deviation back below. Could test the Bollinger. It may even push back really deep before looking for new highs. We'll have to take it. We're still a good few months off wave. Okay.
And do you have an opinion about the elections? Like from what I've seen and read, most of the people are basically saying that if Biden wins, markets are going to tank hard, but potentially this might calm down the American people. While on the other hand, if Trump's win, people are expecting market to keep pumping and riots keep going. I don't think it's that easy. Like I feel like Trump has been pumping the markets so hard and so artificially that I feel like they played most of their cards. Yes, they could just keep printing money, but why Biden wouldn't do exactly the same?
Well, I'll tell you what we'll do. Next time I'm on, I'll give you an overview. I was supposed to do it today, but I think it's going to take too long to do it in one session. was to give you a preview of the bond market and why the bond market is important. But we'll dig into that next time.
Yeah. With pleasure.
But you're right. You're right in every sense because I think the Fed and the central banks have really played all their so-called Trump cards.
Yeah.
What more can they possibly do now?
I don't know. It's exactly my thoughts, and this is why I'm like, I think the U.S. elections are going to be some sort of catalyst for markets to have big movements and big volatility. But it almost feels like the charts are already telling us that. And no matter the results, I feel like it's hard for me to be optimistic about markets whether Trump or Biden wins. Like, but that's maybe because I'm a bit pessimistic, but yeah.
My viewpoint is I think I agree with you. We will see a lot of volatility, but I think we're going to see a lot of chop. I don't think we're going to get a strong trending direction.
Yeah, that would be too beautiful to be true.
Yeah, because you have a lot of uncertainty in the market. So when there's too much uncertainty, there's a lot more volatility and chop because no clear direction or indication as to what's going to happen.
Which will most likely take all the money back from the people who have been riding the craziness of stock and crypto markets for the last few months. All the new so-called stock traders. Like I don't know the guy, but for example, Dave Portnoy. If Dave in a market that is going to be shop for a few weeks, I don't believe he's the kind of guy that is ready for that, to be honest. He's a good trend rider, but if the market starts shopping people, this is definitely the moment to take a step back. And if you're not positioned already, you shouldn't try to fight it, in my opinion.
Yeah, for sure. We're just looking at the volatility index on the SPX, and we can see that there's not really a great deal happening, even though the SPX has been breaking down on a daily 4-hour premise. There's not really a deal happening in terms of volatility, so I'm expecting this to pick up and start pushing up higher as price really starts swinging around over the next few weeks. Okay. So yeah, that's the ES, and again, the Nasdaq is another important one because obviously it's the top tech stocks in the UK, in the US. Sorry.
Yeah.
So you can see that's also starting to break down. Very, very overextended, but we have to understand that majority of the SPX being carried by tech stocks. If you look at all the other sectors, the SPX, there's not really much happening. They're all pretty much going sideways. So tech is carrying the weight, and if tech can no longer carry the weight, then I'm not too sure what will happen.
Yeah, definitely. It definitely feels even more than usually that the let's say the big four, to resume everything, but the big four tech companies they clearly have been carrying the market pretty much the
Absolutely.
same way. Pretty much the same way shitcoins have been carrying the crypto market since May, in my opinion.
Yeah.
Very similar.
Yeah, so far we've covered the banks. The banks are in an absolute shit state at the moment because of what's happening. The dollar is pushing up. All markets are breaking down. Let's have a look at commodities. Oil again. I think oil could be a very, very interesting play. Again, if the economy really gets hit hard with COVID, then does it make sense to speculate bullishness on oil when the cost of production could potentially be higher than basically storing a barrel of oil? So that's something that you have to think about as well in terms of storage costs. Where do
that's
producers and purchasers of oil?
I was about to say that as long as we could expect some sort of strength on oil, especially if dollar is doing great, but it depends if we have pretty much the same story we had in April, where everybody was buying barrel, but nobody was able to store them, and that ended up being in minus $30, something like this.
Absolutely, yes.
It feels crazy to think that it was only a few months ago, and it was one of the most craziest markets I've ever experienced since the beginning of trading and record tradings, and we already forgot about it. Like, nobody's talking about it anymore, yet it was so fucking insane. I remember I was in front of my screen and I was like, when the fuck is it going to stop?
Absolutely. But
that's so 2020.
Looking at the oil charts, it's pretty much been the same. Huge sell-off at the start of September, pretty much as the euro on Bitcoin. This breaks down, get that bounce, consolidation bounce, and we just had a nasty wick on the daily again, which is ugly. If I'm being honest, it looks like we could be heading down to 38, 37, 36s. So that's oil in a nutshell. Something to keep your eye out on as well, because that really go through a rough time over the coming months. Gold, really not much to say. Again, the highs, now trading back below the previous highs. Using a key level here. It doesn't look good, in my opinion. Short term, probably into 1800, this level here. Silver, I think silver looks just as bad, if not worse. Silver was previously range. Huge breakout. We get a retest of the range and take it from there at that point. Breaks back inside the range, then we'll have to see what happens again. Price at the moment is just very unclear to me. I don't really want to be trading much of these commodities or stocks coming into the elections. I think the big move has just happened now over the last 2 weeks. We're going to short the market. That was the time. I wouldn't personally be looking to jump into a long or a short unless you're day trading, or perhaps looking to do some options trading. There's that.
If you're not positioned already, I feel like you have no business trying to catch up. Like,
unless you're day trading, like I said, short-term trades.
Trading, obviously.
Yeah.
If you're day trading, obviously you will want to make the best out of this potential volatility we are about to see on the markets.
Yeah,
definitely.
But yeah, there's that, and then we'll just look at the cryptos then. So Bitcoin, we've got our Bitcoin chart. There's a weekly range we've marked out. Just for those of you who don't understand how I've done this, I'm going to give a very quick overview. So we've got this swing high over here.
Ethereum has been wrecked so hard today. Wow.
We've got our swing lows over here. Okay.
Same.
So this is, if you think about the trading range, apart from this one deviation here, this has been the core of trading range. Okay. Now, I'm not going to be calling moon or whatever become euphoric until we break above this level. Once above here, then we can talk about Bitcoin making new all-time highs. I've insisted on this since 2019 that this is the key level this has to break. Once above it on a weekly and a monthly basis, then we can talk about 15, 20K. Until then, it's just been rejected. Huge sell-off here. Now what looks to be breaking down, following the markets. Let's mark out the mid-range. The mid of range is often the 0.5. I've done this many, many times now, so I pretty much know where this is. Just round about this level here.
It's exactly there. It's 1.6, 1.7.
Yep.
Autism.
So if you look at, I think these lows get taken immediately, and
Man, this is so ugly. This is the ugliest development we could have seen.
I think it's beautiful because you get a brilliant buying opportunity.
No, I mean it's beautiful, but I mean it's ugly for
sure.
For people that were euphoric already. But yeah.
Right, so this for me was the previous local range high. Notice that it is also the 0.75 of the range. Perfect. The deviation above it, people get bullish, smash back below it again. Just a fake out, trap some longs. Now for me, price will probably come back into this mid-level, which, as I discussed last week, is confluent with the weekly Bollinger Band. Let's throw that on there now as well. The B bands are pushing up, curving up at the top here, at the middle of the B band again. I think if we lose this level, then probably the nail in the coffin in terms of any potential new highs into October, November. We will see a corrective leg into here. I believe there's a high volume node around about 71. Now 71 is also the yearly open, so that's another key level that you want to be looking out for. Around about here.
And if the market keeps trending that way, this is potentially where we could be very close to 200 weekly EMA and MA.
Yes,
they could be sitting around there, which would be an insane confluence for a long-term long.
Absolutely, yeah, I fully agree with you on that one. And that's exactly the next point I was going to make. The weekly moving average. Also, the 200 weekly moving average.
Yeah, they have been the combination of the two has been so clutch since the last few years.
Let's stick in the line there, so we can see.
For those that are watching my daily updates and my focus on the markets, this is the perfect combination of my 2 weekly Bitcoin charts, where I have one where I'm focused on the bigger range and one focused on EMA. This is basically the same chart. I need to find this one.
So I agree with you, Pierre. I think, look, people have to understand that if Bitcoin does come all the way down here, it's still very bullish because high low, high low, high low. The fact that we've made a higher high, look at these is a break in market structure. If this holds, I have to be very bullish at that point, and it's such a brilliant buying opportunity. As long as these lows hold, there's no reason to be bearish on Bitcoin, macro, that is. So brilliant buying opportunity, in my opinion. There's no reason to be afraid of a deep pullback. If you think about it, look, it's been a powerful move up with very few pullbacks. Now, if you're macro bullish on Bitcoin, you do want to see some form of consolidation here, price push up high, because this, to me, if the market did go higher from this point, it's just too unhealthy. You do want to see efficient moves as opposed to inefficient moves. Yep.
You want to see basically something like the late 2018, early 2019 bottoming process. Like, as you can see, the weekly candles in early 2019, they were so painful for so many people because you can see the volatility was absolutely gone. But it was actually a good bottoming process for Bitcoin, and that's why after that it managed to went from 3K up to 14K, because it was the trend was the previous trend was finally reset from 2017. It was ready for a first big move, and this is why I have never been a big fan of V reversals. They don't really fit my trading style because they messed up with moving averages very much. If we could, the best scenario would definitely be a yearly open retest with confluence of 200 weekly EMA and some sort of a true bottoming process that would be. I want people to be extremely bearish at bottom. I don't know if you see what I mean, but this was exactly what was happening at 3K in 2019. Everybody was already calling for 1K. And yeah, I feel like we didn't have that this year, but maybe I'm forgetting everything. I don't know.
Absolutely. You're right. I think the level I'm just about to now lines up with pretty much what you said. So much confluence here. You've got 200 weekly moving average. You've got a yearly open level. You've got the 0.618, 0.705 level. Really anything, me, just going to use a different color. Anything in this region here is an absolute buying opportunity. Because then you've got your range lows and invalidation. But personally, I'm going to be dollar cost averaging if we get this low, if we get a deep pullback. Personally, I'm hoping we do, because I think it's just such a great opportunity to pick up Bitcoin much lower down again. So yeah, that's my high time frame range on Bitcoin. Let's have a look at the daily level. So I spoke about this key 0.75 level. Let me just remove this MA. That's our yearly open level. There we go. Okay. So again, tweeted yesterday, and I also made a very short snippet on the video on YouTube that for me, this is going to be the key level here. This level that's capping price. The deviation above it, back below it. Now, what's key here are these lows. Because I think if we break, in fact, what I'm going to do, let me just start off with a cleaner chart. Again, you've got these highs here. These highs, less. High, rejected, and rejected. Well, probably not on the Bitstamp chart, but on the BitMEX chart, it's slightly more extended. Again, you've got a perfect retest, bounced higher, smash below, deviation above, back below. Okay, and for the range low, I'm going to use these lows here because look, you got 1, 2, 3 here. I think there was a point of confluence around here. Yep. Okay. So why this low? Because if you look at price historically, beautiful reaction off there. Price really didn't spend much time. Wicked higher, sprung up. Then again here.
This was the halvening dump. Yeah.
Yep. SR flip pushed higher. Again, just smash below, underside retest, smash. It's a lot cleaner on the BitMEX chart than Bitstamp for some reason. I'm not sure why I chose Bitstamp.
Well,
there we go.
The weeks are a little bit more easier to see on the BitMEX chart because they are accelerated, in my opinion. And the interesting thing about the last time we retested this range low, the halvening dump, was the last 200 EMA daily retests, if I remember correctly, on Bitcoin. It's the last time we retested it. I need to check, but I think it was the last time we retested it. Since then, we've been moving away from it, and right now it's sitting at 9.8K around your gray box right now.
Okay, it's a very simple scenario. What was the down candle that pushed the market higher? Well, it was this significant level of demand. Look, I had this resistance level just here. It's broke below it, rejected, closed above it. There's that down candle there. That's where your buyer stepped in and pushed the market higher. So what you want to look for when you're trading is look at these huge expansive moves. What was the preceding candles which caused that? Essentially this level here, okay? So that lines up nicely with the mid-level. You break below this red level, then I think we come into here, target 1. Breaks down, then most likely we're going to take out all these lows here, possibly here. And I'm looking for a scenario such as this. I'd love to see something come really down, around deviation below to this level here.
Jesus Christ, bro, are you trying to kill me? Fuck. It's just ruined my day. Like, oh, that'd be great. I'm like, nah, man.
But somebody's like, please, God, no.
Like, please, no.
We probably won't get there in one leg. I mean, I'm sure. I'm sure if we do get there, then it's probably going to be in slow steps down.
Like
but,
last March.
Yeah.
Imagine an equal-sized move again. People would be discouraged.
Yeah, I don't think we're going to see it this time.
And I don't even think people will be discouraged. Like if you're still in crypto after what happened in March.
Not us, but like it kind of starts removing trust from the market. No.
Nothing will.
Oh, I don't think it does. I disagree with you there, Bagsy, because look,
it's a trader's dream, but like, okay, I'm thinking of shit coins when like Matic, when they just dump over and over. People just don't want to trade it anymore,
Okay, the issue with Matic is that you've got to look at how much volume was being traded and how thin the books were.
Yeah.
Any cascade would have sent Matic crashing, which it did. Bitcoin is much more liquid than that. So, and secondly, obviously everybody understands what happened with BitMEX, but you have to understand that when global algorithms really start kicking in, there's no reason for Bitcoin to be any different. The algorithms just really put it in one direction and push the market much lower. It's probably why we saw BitMEX to switch off their engine, because most of the volume at that time was traded on BitMEX. If you look at Binance Futures really taken over, in my opinion, in terms of volume.
Yeah, I just think for a regular, like if you guys want, maybe it's our real mainstream adoption's already happened, but for that to really happen, you can't have March 13th happen over and over again, is what I'm trying to say. I mean, you can, but it's not great. Like, you don't want people saying it's not a safe market. I lost my home, which already is happening. But
I agree. I would tend to agree with you, Bagsy, and I was thinking the exact same thing at least at the beginning of the year. But if one thing proved us something, is that I think 2020 has been the year the most people around the world has been trading. Either stocks, crypto, whatever the fuck you want, but it feels to me at least that I would love to have like data from Robinhood, things like this. I feel like it's been the year everybody has been trading the most, and it happens because we have seen a crazy volatility, and with crazy volatility comes crazy stories and crazy narratives, and this is what people keeps trading and burning accounts down and always coming back to it. And I honestly thought in 2018, 2019 that half the community, half the coins, half the fucking YouTube influencers would be gone by the beginning of the next bull market. But the truth is that everybody's still there. Even fucking Trevon James and BitConnect is still there. So I don't know. I feel like nobody wants to fucking leave this crypto market. Everybody's stuck with it. But yeah, I don't know.
I think one thing that, again, you have to understand that if we get a break in structure, look, we haven't had a break of a market structure on the daily premise, okay? You've got a high low here, but you've got another lower high here. If we get a lower low, you'd have to agree that, yes, there is a shift in market structure on the daily chart. Would you agree or not?
Sorry, can you
yes.
Can you repeat
Okay.
what you just said? Sorry.
So basically, one thing that you should look out for is a shift in market structure on the daily chart. Okay, you've got a high low followed by a low high.
Yeah.
If we take out these lows, then confirms a potential shift in market structure.
Yeah.
Then all we need is basically lower low, lower high, and likely any rejection here, we're going to get a lower low. Okay, probably the scenario that I'm looking at. Now, a lot of people are saying to me, "Oh, I'm gonna bid 9.5, 9.6," which is fair enough. Absolutely. This is slightly unusual. It's not something I do very often. Let me quickly show you something. If this was long in the market, you'd definitely be longing a pullback from here.
I would be fucking long on that.
Right, there's your range lows. Just get a better.
Yeah, exactly. I was amongst the people that were looking to buy a 9.5, 9.6 retests at the end of August. But the way the market has developed and this dead cat bounce makes me much more cautious about that. I would have loved to see a retest of that level, followed by yet another V reversal, then seeing this type of market structure. We've, just like you said, we just printed basically a lower high and a confirmation, if needed, of a higher time frame market structure break. And it's been beautiful. A lot of shitcoins have been printing perfect charts. Wi-Fi, I never know how to say this one. Eon Finance, has been the best example. Like the double top, the market structure, loss, a lower high after lower high. This is beautiful.
Yeah.
And yeah, fucking reverse charts. It's inverse, bruh.
Absolutely. Looking at this chart here, it is inverse. But my question is to anybody watching, you're long in this. Do you think most of the liquidity is going to be resting, or where would you target to take your profit? Surely it would have to be these highs, wouldn't it?
Yeah, instead of longing 9.5, 9.6, I would be looking to longer retests of the level we are about to break, basically.
Yeah.
Oh, this is inverse, bruh.
Exactly. What I just said.
I wasn't looking.
Yeah.
Like, what chart is this?
Yeah. The point I'm trying to make here is, look, if you were to long this chart, surely you'd be targeting these highs here, right? This is where you.
I'd go for recency there.
Yeah, for sure.
Yeah, definitely.
Obviously, yeah, you've got this, but I mean, we're talking about if this gets taken out, then obviously we're going. That's why I don't really give much significance to this level here. 9 point. It doesn't really mean anything to me. I'm not seeing any reason apart from the fact that
it had a lot of confluence. It had a lot of confluence. You had at least a few weeks ago, you had 20 weekly EMA. You had previous range high, range pivot.
Yep.
You had the CME gap, but all of this has become a little bit irrelevant because of the price action from the last few days. This is what I was saying. Like, I'm not that interested anymore, personally.
Yeah. I just think from a monthly point of view, that's a disgusting rejection.
Fuck.
Again, if anybody's into order blocks, then probably this level here is what you'd want to see hold first. Can probably a nice SR level run. But something along those lines. But yeah, so that's it really. There's really not too much to add to Bitcoin apart from the fact I think we're going to reason why I think I can't find any strong reasons as to why we're going to trade higher for this time being. I just think it's a good time to prepare to buy the dips. And that's not really. And same shit. Just the one chart I've been using for high time frame. I think we're gonna come back to this zone here. After that, we'll just see how it holds up. If it breaks down, I won't be surprised, given how we've only had a few weeks of selling. We haven't even had a month of downtrending. That's why I think that I don't just want to rush in. I'd rather chase price on the way up, try to dollar cost average after prices just trended for what, 4 or 5 months, and just this 1 month of pullback. Doesn't mean say I'm bearish. I'm just saying that, well, look, I'd rather wait for consolidation to occur, then step into the market, as opposed to just trying to bid any levels. I'm just referring to spot buys here, not day trading or swing trading, just where I'm looking to buy Ethereum, where I'm looking to buy Bitcoin, where I'm potentially looking to buy certain alts as well.
Wow,
so
talking about altcoins, Link just lost $8. It's at 7.3.
What?
Link is at $7.3.
How? I haven't looked at it in a while. My god! Yo! I'm gonna collect so much clout on that. Hold up, I have the perfect chart. Oh, poor thing.
Wow, that ETH BTC chart looks pretty scary, XO. That rounding top on the weekly.
Yeah.
Jesus.
It's like Euro USD, doesn't it? When you the Euro USD chart.
Damn, that looks old. Yikes.
That's why I think we're going to see a slightly deeper retracement than what most people are anticipating. And you know from experience, we're not just going to bounce straight away. I think there's going to be a a good consolidation period, accumulation period.
Yeah.
In terms of market cycles.
I think you're right about that, and I've been fairly bullish for a while now, and the last Ethereum long was basically, I mean, I told myself that was probably going to be the last long I took, because that was really the line in the sand for me on an intraday basis. But as far as high time frames are now turning out, like the current Bitcoin daily chart, it just really doesn't look good. And when you account for all of the stuff just really outside of the crypto markets that you've already gone over, there's really absolutely no need to be still in a risk-on market and give back literally all of your profits and probably more to the market. So I tweeted earlier today that crypto short the bounce UB was back, which is obviously just a joke for people who may have followed me for a while. But
2018, baby.
Yeah, right. But that's really how I feel about the market now. Bounces should be shorted at least until we see some more clarity on higher time frames. I really love what you've gone over during the live stream so far. It's really just really good stuff.
Yeah, I appreciate it.
You've been able to put in visually show what I've been trying to explain for a while, I guess, as far as your entire thought process. So it was really great. But I think people should really take it to heart and not be discouraged that, if you're correct and if, a number of other people are correct and we do see a pullback, that it's really not bad. I mean, pullbacks really aren't bad. They're only bad when you're over leveraged and just can't switch bias. Like, there's really no reason from going from bullish to bearish, but actually having specific arguments to back it up. There's really there's nothing wrong with changing your bias, unlike maybe what some people on Twitter may say about you. But I mean, just the Ethereum BTC chart has been up for the past few minutes, and that just really looks horrifying. And
it is.
Based on that chart, and if we're just looking on that chart and not really taking into account all of the other global stuff going on, all of those charts, just that chart alone, I mean, I'm pretty sure that's a setup I took a couple years ago, just rounding off on the H4 and the daily. That was a setup you saw all the time. That pattern was constantly on the chart. So to see that again is pretty scary to me.
Yeah, I completely agree with that. It's if the market had a few ways of developing during September to remain some sort of optimistic short term, it went complete opposite, in my opinion. The most optimistic way for me would have been a Bitcoin bearish with Ethereum fighting, which would have been very good for the for shitcoins market, and a sign that whenever Bitcoin was bottom, Ethereum would be trending hardcore. But that's the opposite. We've seen Bitcoin fairly strong, not the strongest, obviously. Just look at where it is. But we've seen Ethereum for the first time since the beginning of 2020, if I can remember correctly, completely performing Bitcoin. That has been a shift trend, in my opinion. I was talking about it in one of my daily updates. It's been one of the things that broke me the most. I don't know if that's English, but this is one of the things that I was like, why is Ethereum so weak just like that, like compared to a few months ago? This is the first time it's bleeding in the downside. And maybe it's yet another proof that Ethereum is actually the one leading this market much more than Bitcoin, but that's another subject.
I agree. Yeah, absolutely. It's from experience. Yeah, I think Ethereum has a strong influence on altcoins, so yeah, it's no surprise also.
Yeah.
I mean, looking at this, look, you have to understand, right? Okay, so in terms of overall context, look, high, low, high, low, high, low, high, low, another high, high, another high, high. Okay, so macro market structure or weekly market structure is still bullish. Okay, so essentially, me personally, I don't know how deep this is going to come, but if this does come to this level or this mid-range here, I would be a buyer at that level. How can I add confluence to that? Well, I'll just probably add a trend line to it. Looking for something like this. I'm a big fan of trend lines and channels. This to me was a very nice one. where you just drop it on here. We've got the deviation out of the trend line channel. Everybody's super bullish. People talking about $500-600. Really had to close this level on the ETH BTC chart if we were going to hit 500-600 levels and higher, but we didn't get that. So we're looking for this pullback now into roughly around about here. Now, if we just extend the chart, let's add another level of confluence to this. Let's hit the swing low to the swing high. And yeah, I mean, it is a deep pullback. This immediate level for me is going to be around about this level here. After that, we'll just see what happens. But just in case we do get a deeper pullback, I'd be much more confident buying at this level here. I have a clear invalidation level below the mid. I know exactly where I'm going to get out. It does do a deviation below the mid, reclaim the mid again, then I know where I'm going to get back in. So that's my plan on ETH BTC. Or you can probably figure something out on ETH USD as well. It shouldn't be too different. So let's look at ETH USD again. Yeah, very much. I've got like a block that we can use here around about this level. Around about 220, 250 level. If that goes, then yeah, everything else is going to go lower.
If anything, if the Ethereum BTC chart wasn't clear enough, on the USD chart that you have up right there is even cleaner, because we have consolidation at the highs, right? Then a breakdown, and then just a very clear bearish retest there. Yeah. I mean, that's as clear as day. Anyone who can draw a horizontal line can see that. So, now what we'd be looking for is a daily close below that consolidation to the left. It looks like it's on that chart maybe like 320s. That dotted line we're basically at now. So a daily close below that. I would say if you're not already short, look for some swing trades below there. I mean, that's what I'll personally be doing. So
I think also people, if when you're looking at charts, when you see these big candles, that's a very thinly traded move in terms of volume. Okay, so what do I mean by that? In terms of how much time price really spent at this level. Look at this level here. Spent a good 2 months. June, July, broke out. Okay, whereas this here, it's just nothing really. It's a trending market, so you're not really going to find killer support, in my opinion, around these levels. As you can see,
yeah, that was a really great thing to point out. Yeah, that's a good call.
So we're looking at inefficiencies in terms of price ever coming back and filling these gaps. Well, I think if we break, we may get a very thin, fast move. Into here, what do you reckon you'd be here first? If that doesn't hold, then most likely there in the coming months.
So something like that is probably what I would take. I really like that as we broke those highs to the left there, I'm trying to explain this well, but we have that consolidation that you just pointed out for like 2 months or whatever. We broke out right above that horizontal black line. We stalled a bit at your top dotted line. I like that area as an area to look out for, to start to look for shorts, maybe based on the 4 or 12 hour. Yeah, so that's probably where I would start to look for shorts. And then I would be mostly out of a short at that 2-month consolidation period that you pointed out. Just because, again, we spent so much time there. Will we break it on the first try? Probability says no. I mean, there's a high chance we do not break it on the first time, so that's where I'll look to start scaling out, like probably 75 to 80% of my position, if not all of it there.
Yep. Yeah, perfect. Absolutely agree with you there, UB. So basically, what we're looking for is any breakdown, retest, put it down into this level here.
Yep, that's exactly it. Exactly, yep. Because, I mean, as you can see, we're most likely just going to cut down, like, what is it, $20 or $30 very quickly. Because look left, where's the support from when we had the breakout, right? The support is that consolidation period, but it's not the most recent. The most recent area of price action we have is a breakout through that entire, like $40 or whatever that is. So we're most likely going to see a quick move.
Absolutely. So I'm fully with you. Any bounces, in my opinion, I fully agree with you, are going to be for shorting. So into strong levels of resistance. One thing you again, like I've pointed out, and I keep pointing this out because when I was trading back in 2017-18, right? One of the things I never appreciated until SC taught me this, which was that look, the price consolidates in a range for quite some time, which we saw here. This was a 2-month consolidation. Breakout, as long as it's not a deviation, is often quite relentless. May, June, July, that's a 3-month consolidation phase. The bigger the range, generally the bigger the expansion, which is what we saw here. So this is a distribution top, and I agree with you before. Any breakdown here, I'm not sure how much of a pullback we're going to get from this level.
Yep, agreed.
Any breakdown below here, it really doesn't give you a chance to get on board effectively. Sometimes it just goes without you.
Yeah, and also, at least in my opinion, and what I look for as far as position sizing, in that 3-month range is when you kind of want to stick to lower position sizes, and at least for me personally, I stick to scalps and day trades, because really, what am I going to get from that range? Maybe a couple % here and there, but this is where you would make the most money, I believe. So when you break out of the range, that's when you really be more aggressive. And I don't know why this was a meme on Twitter, like bet more or whatever, but that's typically when I would size up when we do get a range break. So as you can see, when we got a range break from that solid black line there above that breakout, that's where I would have sized up and added aggressively on dips, because if we look left, I'm not sure what left was, but if there's more inefficiencies to the left, then we would have seen just it rocket above, which as you can see we did. There was nothing above that high there. So that's when I personally look to size up, and then I size down in ranges. So now when we do get that breakdown, I'll be looking to size up. Now, when I say size up, I'm not saying anything ridiculous like 10, 20, 30x leverage, nothing stupid like that. Maybe like 5x is me saying that I'll size up, but risking, I don't know, 5% of my account, 7%, just things like that. So that's also something to look out for. This is when you should think about your position sizing and try and make the most out of your short positions.
Absolutely agree with you. Yeah, I think you're.
I agree with you, both of you. It's very interesting discussion. Like, very interesting.
So, yeah, again, like, just to summarize exactly what you said, I think you break down, there's your FTA, but below that, there's really not much until 250s. So, 90 FTA, and then 250, 260s. Take it from there, really. Okay, so how do you get on board in terms of shorts? Okay, so we've already discussed one scenario. The way is, so we're on the daily chart. Let's break this down. There's our broke above, smash below, retest, broke down. Okay, so a pullback now is what we're looking for. Now, there's nothing really stands out for me on the daily here. I'm not sure we're going to get a bounce back up here for the next few days. I'd be surprised. Definitely wouldn't be shorting right here now because you're shorting into support. So actually what you're looking for is the first level of consolidation before the breakdown, which is this section here. Bring it across, you can see it's almost a perfect SR consolidation breakdown. Any pullback, yes, potentially into here. It's below again.
It's actually once again a very good confluence with short time frame moving averages that can be used to have IDs of a trend strength. Once again, just exiting position once Bitcoin lost H425 and 13 EMA. For those that are very often in the chat, you must be seeing me talking about that pretty much every week. But once again, it would have given an exit at 10.8 and an entry at 10.3. It's very clean. And right now, they are both sitting around 10.6, 10.5. I don't know if we get a retest this high. but this would be a very interesting level.
That's right. I'm saying if we do get a run of the highs here, then back below.
Oh, you're on Ethereum, yeah, sorry.
Yeah. So it's just a possible scenario of then just to run the stops. If it does do that, we don't know what's going to happen. We just got to give one scenario. Deviation above, back below. Pulls us back below this consolidation block. Then you can short it here into here. Or you can wait for this level to break, give the pullback, gets back below again. Sure, and look to take it further down. So one way of getting on board here is a pullback. Second option is a breakdown of this level. You get the pullback and you get to add position size here. Then you can trade it all the way into 290, take some off, and then look, take some off here at the mid range as well. Or you can hedge your position. That's essentially how I would look to get on board of Ethereum. So we've covered Bitcoin, Ethereum. Anybody want to chip in? Any questions on that? UB?
I agree with that on how to get on board with that. Also, just going back, that's related to the range breaks and stuff like that. Breaking this down would be a range break. So what you would look for is more aggressive entries. Now, that's not saying to go just absolutely crazy and just and add to your short position on low time frame bounces or anything like that, but you want to go to the 4 hour and just highlight different areas and plan out your trade accordingly. Say, okay, I'm going to add more here, take off more here, because pyramiding into a position or adding more to a position as it's going your way is really powerful, and it could really turn a trade from I don't know, a good trade to a very, very good trade just from adding to a position you're already in and it's already going your way.
Yeah, I agree with you on that one, because one of the biggest game changers for me has been pyramiding into a position. I'm not trading with stupid size on my first entry or first position allocation.
Exactly.
So yeah, 100%. Because I think what people don't realize is that when you go too big too early, you often get shaken out or you puke your position.
Exactly.
When you're scaling, pyramiding in, you're really looking for brilliant entries that you don't mind if price goes against you, because it just gives you confidence. As long as you know your context is right, you've got your SR levels defined, then you've got more confidence that you know you can comfortably add at that level. And then once you get the breakdown, well, you can really floor it hard, because then you know price has done what you probably didn't expect it to do. It's broken down again, and if it's broken down again, it really shouldn't have. Gives you more confidence to really floor it harder. Now you've got yourself a good average entry, and you've got room, buffer to add more position size, and really push the trade hard. So that's personally how I trade.
Yep.
This is I think this is one of the most important thing I've learned from you and Loma over the last two years. And this is something I often discuss with members, scaling rather than trying to enter heavily a position at one particular level.
Yeah.
Even if price bounces from where you started your position, it might even give you a better even argument to increase your position. And depending on your invalidation, the truth can be said if it keeps dumping. So I don't see any reason anymore, unless you're scalping, but then again, the size are usually not the same depending on the person you're.
Yeah, of course, yeah.
As a person like me that is mainly trend trading, that is a swing trader, I would say, pretty much like you, I almost never enter a position at one place, mainly because I'm often playing compression into impulse. So basically, it means you have time to build your position. But yeah, I would definitely I would definitely say that it's better to scaling. And this is something, for example, he's not here, but something Loma does very often, and very often writes in his setup.
We just got a really great question on the topic from Toby here. The question is, if you add to your position further into the trade, if it goes in the desired direction, then that added part needs a new stop, correct? Otherwise, my risk reward is becoming worse.
Right, yeah, I agree with you. So, yeah, by all means, sometimes, look, I'll be honest with you, sometimes when I take a trade, if I know I can get a better entry, cut the trade and risk getting a better entry. So do take a very, very small loss, knowing that I can get a better entry. That's personally one way I trade. Sometimes I will scale in, so sometimes I will open up a position and hope that price, does drop lower or higher from in terms of shorting. But like I said, if it doesn't feel right, and if I believe price is starting to go against my original plan, I'll cut it straight away. Because look, when you cut a trade, think about it. People talk about this whole argue about having your stops at break even, which I partially agree with. Yeah, we're not going to go into that today. One thing I will say is that, look, if you're in a trade, price goes against you, just cut it. Because if it starts going in your way again, second time around, you've got more confluence. Price is ready to move lower. So your setup is still valid. The fact that you've had to cut it very early because you think it may go against you, but eventually it doesn't and it breaks down again, step in, because now you've got even more probability of the trade working out in your direction. The market has done, shaken out, has stopped out what they wanted to do, fill their positions, and just jump back on board. You take a small scratch, you know what, second time around, you can probably add more position size because now you know you're going to get the direction that you initially anticipated. So that's also something to think about as well, which I don't think many people talk about.
Yeah, that's a really good point. Just cutting your position when things start to go wrong. I mean, that's extremely underrated, because the absolute worst scenario to be in is when you're in a position and it's just underwater and you're just trying to force any kind of bullish argument you could possibly come up with to make yourself not close a position. But it'll feel a lot better to take, I don't know, X amount of loss rather than double or even triple that, and then you end up being a bag holder, and then you're really just looking for absolutely anything you could grab onto in those positions, if that makes sense.
Yep. Absolutely. Now, just to give a bit of context, I'll give you a classic example when I use this strategy. If price is bullish, if I'm counter trend trading, so I'm not trading in the direction that price is going, either knife catching or I'm fading. This is where you have to be very nimble and very quick to cut your trade, okay? Because you're going against the trend. If you leave it for too long, you're going to get wiped out completely.
Yeah, I agree.
There's certain times when I use that strategy. Effectively, like I said, just a summary. Trading or knife catching. Looks wrong, cut it, get out, get in lower, get in higher, whatever you need to do. Just reduce your risk straight away, okay?
Yeah,
I think... Yeah, sorry, go ahead.
No, I was just going to say, we got another question or comment in the chat. Thanks for that, UB. What if you're caught in no man's land, for example, underwater on a position for a long time? A few folks in here mentioned that they were in some bad trades. Would you recommend just cutting now or hodl gang? I always would, most of the time, I would say 90% of the time, just recommend cutting it, because there's a side where, okay, you're potentially going to be a bag holder, but the other side of it is, how could I be using this capital effectively to potentially increase my capital rather than just holding on to this dead bag that's going nowhere? Cutting a losing trade that it's already invalidated is you just have to rip off the band-aid and just use that capital elsewhere. That's what I've always found.
Yeah, I agree with you, UB. I agree. Sometimes if you don't want to cut your position entirely, then reduce it significantly. If you're looking to average in things that are going against you, then reduce it. But yeah, I agree with you. You be zero emotions, fuck about, cut your position. That's your money you're going to potentially burn out on. So what you've got.
Ideally, you shouldn't. I know it's much easier said than done, and it's actually something that I've realized I was not doing anymore, and that was one of the biggest improvements last year, is that you enter the setup, you should have any validation in the first place. It's basically one of the most important things you want to have for entering a setup. I know it's much easier said than done, and it's not necessarily something you want to hear when you're actually in a trade, you're underwater. But at least it can be a lesson for next time. If at the first time it's in the first place you had a clear invalidation level, you should not be concerned, and you should not even think about cutting your position early or taking profit early, for example, or things like this, because you're supposed to follow your plan. It's very much easier said than done, but it's actually what differentiates a good trader to someone with insane and good execution, in my opinion. Like, I love the picture from SZ on Twitter. It's his Twitter banner. It's basically a box with on the left plan, then waiting. This is where you fuck up, and then trigger. And it's so true. And I believe many people are stuck in that. Yeah, exactly. Exactly. So, and it's quite true when you're already in a position to. If you don't have a plan and you're only enter the setup and you're waiting and you're seeing price doing not what you were expecting, this is where you fuck up. So yeah, I would say if you're deep in a position that is shitting the bed, try to take a step back, highlight major levels that you don't want to see or that you want to see reclaimed, and or where you be okay registering your exposure because you're expecting it to be a resistance, and yeah, try to adjust the risk as it goes. But yeah, it's very shitty situation to be in.
Absolutely.
And I've been there many times.
Absolutely, we all have.
Yeah.
So for me, I just want to wrap up on what my favorite alt is potentially going into 2021. It would have to be DOT.
Yeah.
There's just so much happening with the DOT ecosystem. Now, what you're going to see on Twitter is people saying XYZ blockchain is better than DOT because they're ahead of DOT. Well, not necessarily. It's not just about how great the blockchain is. It's about the whole ecosystem, okay? Being a developer, I can tell you that the DOT ecosystem is one of the best, if not the best out there. You can be an absolute noob, and with a few hours of education in terms of the substrate system, or the priority system, which is used to create blockchain applications using DOT, you can have a blockchain created on a testnet in half an hour. There's nothing else out there that can do that for you. How many projects have you seen from 2018, 2019 have a testnet release, a mainnet release? They still haven't done that yet. With a DOT project, you can go to testnet straight away. Also, why I think DOT could be potentially huge in 2021. If you think about the ecosystem, now for those of you who have been in the market since 2017, you saw what NEO did in terms of its price when there were blockchain projects or dApps that came out based on NEO. It accelerated the price of NEO to $180. I believe there's a very, very strong possibility if you create a project on the DOT ecosystem next year for individuals or retail to take part in the ICO, you probably have to use your DOT tokens. Just in the same way that if you want to opt into an initial exchange offering, FTX or Binance, you have to hold BNB or the FTX coin. I think the same could happen with DOT. I really do, because I think everything I've read and everything I've heard, it seems to be being that way. One of the reasons is because of the performance issues with ERC20 smart contracts on Ethereum. It's a bottleneck, and what the DOT team will be doing is I can see it potentially happening. I really can. So I think that's another reason why I think the DOT ecosystem is going to be brilliant, and holding the DOT token next year. And for me, in terms of sorry, go ahead.
Yeah, from what I understood, there are already some coins in the DOT ecosystem that are going to be used for some kind of ICOs or EOs or whatever. For example, OM, Mantra DAO. I think that's the correct name.
You're correct, yeah. So one example was to get into the real initial coin offering. You had to hold DOT.
My bad, Rio.
That's right. Now, I think this is one step ahead of that, because what you basically have to do is that if you hold dot, usually get into a given future project based on Polkadot, potentially only using dot. So again, that's going to encourage growth of the dot token, and obviously it's going to remove supply in my opinion, because you can see a huge token. And what I will do is I'll drop an article in the Discord so users can see exactly what I'm referring to.
You're not only bullish in terms of price perspective for DOT, but you're also very bullish fundamentally.
Fundamentally, very bullish on DOT. I honestly think it's going to be a top 3 or top 4 in the next year or so, in 2021.
Makes sense. This is the best Ethereum competitor we have right now. Makes sense.
Yeah, potentially, because you see, there's other projects out there, but what they don't have is an ecosystem such as DOT, which allows developers to come on board and create projects at the speed of which DOT is offering. But for me,
there are none of them.
Yeah, they're all just ideas and concepts. You have to understand. Right, so you have to understand who the creator of DOT is. Who was it created by? Gavin Wood. Who was Gavin Wood? He was the former CTO, co-founder of Ethereum. He's not just anybody. He's one of the biggest brains in the space.
Yeah, he's definitely someone you want to listen to when you come up to smart contract platforms and decentralized computer and things like this.
That's exactly right. So the Solidity coding language is what's used to create ERC20 contracts. Now, what Gavin did, he oversaw the development of Solidity. So he was literally the lead or the head of the Solidity platform, which we see now. So this guy basically set up the Polkadot project back in 2014-15. If you watch on one of his video talks, he mentions the Ethereum team talking about releasing Ethereum 2.0 back in 2015 or 2016.
Yeah.
This day, they still haven't done that.
Yeah, it's supposed to be for November, but we all know that even if it starts in November, this will be only the first iterations, and it would be only a partial migration or whatever.
Absolutely.
Like, for example, stacking is definitely not for November, in my opinion.
Absolutely. So the fact that the Ethereum team have apparently been talking about ETH 2.0 for many, many years, and they still haven't developed or delivered. And there's teams that are now surpassing what Ethereum are doing, and I think what is really up there. Even the fact that look who's in charge, he knows what he's doing. He knows the weaknesses of the Ethereum project better than anybody else. So yeah, in fact, I found the article. It's actually this one here. Polkadot projects will be able to mint their own tokens in 2021, and we can see reference here that if you look at what ERC20 actually did to Ethereum ecosystem, you can imagine what will possibly happen with Polymeck. It's an absolute essential part of the ecosystem. So you can derive from here how big substantially what is about to happen on DOT could become to fruition. It's going to be huge. So it's definitely a project that keeping a close eye on. In terms of the top 10, I think this is probably the one with the biggest, safest or the biggest potential, if you want to put it like that, out of the top 5. But I'll drop this link in the Discord. So yeah, that's it really from me. In terms of price, I'm looking for a deeper pullback. I don't think this level holds. I'm looking at this level here effectively. This is the only data we've got on TradingView for DOT prior to pulse denomination. So the denomination was the using of the how to explain it now, the conversion of basically the amount of circulating supply of DOT tokens. That was not occurred several weeks ago. Asking for a position on this.
You know, looking to fill a much longer and bigger bag for Polkadot.
Yeah, pretty much. This is more of a just how anybody would be buying Ethereum spot. This is going to be up there in terms of Ethereum, DOT, Bitcoin are probably going to be my biggest holdings. Again, I think when Ethereum 2.0 launches, I think that could be the next trigger for the next cycle in the market. I think we've all seen now how when Ethereum runs, Bitcoin follows. So I think it's just important, just as is important, focus on the Ethereum chart. Look for bullish news and the bullish reversals. Yep. Hopefully Bitcoin will follow, and Bitcoin will probably eventually take over again.
I agree. This is why Bitcoin maxis have been so unsufferable and even more than usually during the last few weeks. It's because, I mean, they obviously know that markets are not driven by the shitcoins they hate so much.
Yeah.
And the truth is that this is how it is. Like 2020 has been a perfect proof of that.
Yeah, absolutely.
Hey, XO, I might have to go soon, like in 5 minutes.
Absolutely, yeah. I'm pretty much done on my side. Yeah.
Okay.
Yeah. Just looking at the dominance chart. Yeah, I mean, I wouldn't be in any alt right now whatsoever. I just think, look at this, man. If it bounces,
Exactly.
going to get smashed.
This is the level you shared last week already.
Yes, it was, yeah.
If I remember correctly.
So yeah, I was talking about the divergence on alts, and I said to be careful on alts last week that I think we could potentially start bouncing on the dominance chart, and that's exactly what's happening this week. So yeah, it was a good call to cover last week.
Exactly, and one thing I've been discussing a lot in the group is we've seen exactly the same pattern over the last couple of weeks. Weak bounces on shitcoins that all lost their low time frame trends. Bearish retest of these trends on H1 or H4, and if you don't aggressively take profit by Saturday evening, you're fucked on the Sunday, basically. Yeah. And you can see it on the Bitcoin dominance charts. Every time you see one of these spikes, it's one of the shitcoins savage retrace after hitting resistance during the last few weeks. I mean, it's fascinating.
Yeah. Very importantly, yeah. Sorry, Pei. Just very quickly, I wanted to point something out, which I was talking about last week. Divergences on the Bitcoin dominance chart. I don't see many people talking about it. Here's the classic example. This, and then you've got one here. When you see high time frame macro divergence like this, always be cautious. Once you see the SR flip, then yeah, it's time to get out. This was one example here. There was another one, I think, back in. There's one here, I think. Perfect. Yeah, this was the bull run in 2017. So again, if we see the reversal this time, there, from here, divergences, one there, one. There's something to watch out in terms of macro perspective on alts, because you all probably know alt cycles become once to twice a year, and that's it. So these often probably play out once or twice every so often on a very, very high time frame. You probably can find more on the daily, but this is on the 3-day. I think there might be one on the weekly, but I'll let you guys figure that one out. I think that was the biggest one on the weekly there. The market just really reversed. Yeah, that's it. Just something to look into, something to pay attention to for the future over the years.
Some kind of like easy things you can check every now and then, and that can give you a real, like, I don't believe it's any kind of alpha or whatever. It's just pure good sense. I don't know how to say it, but it's like, I think it's very interesting what you did tonight, because you basically went through all the side line analysis that you could check when you're trading Bitcoin. Like,
absolutely.
And it's very interesting because I think this is something many people are not doing enough. This is something I've tried to do more and more, and that I've been doing much more in 2020 compared to previous years, and it really helped me. And I think it's one of the main reasons we've mainly been sitting in USDT since late August and avoided so much chop and shitty price actions over the last
Absolutely.
It's interesting because it fits very well the rest of my trading system, because we are basically, when you do all this analysis, what you are trying to understand is the macro trend. Like, you're not doing very detailed analysis point by point on every asset you're looking at, but you are looking to understand trends and your trending trends. And this is why I've always liked your work, and why
Appreciate it.
yeah, maybe because it's very close to my own trading system, and I have a huge ego, but I don't know. But yeah.
Yeah, it's all good. No, it's good. It was good to just run over things. But yeah, you're right. I think people have to appreciate, like, look, Bitcoin is correlated to the global market, so it only makes sense to pay attention to the global market whilst the correlations are there. If the correlations break, then fair enough.
It's an asset across the market on its own. Like, you cannot tell you're bullish on Bitcoin because you're expecting it to be some sort of a safe haven against dollar, and not taking into account the dollar in your analysis on Bitcoin. Because I mean, it wouldn't make sense to me. It doesn't mean you should base all your decisions mainly because the dollar is looking weak or not. It has to be, as usual, when we're talking about indicators or sideline analysis, it has to be a confluence, or it has to be used for additional confirmation, additional invalidation. Don't make this the main analysis of your trading system, but it's very interesting to be aware of the macro context the main asset you're trading is, in my opinion.
Yeah, correct. So that's it for me, pretty much, in terms of everything I wanted to go over. I think
Thanks, bro.
Yeah.
Yeah, I think we basically covered everything.
I think this is one of the best live we've done since we started the event in terms of things we went through. So I hope all the members appreciate it. Once again, UB recorded the call. Thank you, UB. And we'll post it on the private YouTube channel of the group. But yeah, thank you again for all of this analysis. As usual, very interesting. XO. Thank you so much.
Yeah, absolutely, man. Thank you. It's good to be on. It's always good to see what other guys are posting as well. Yourself, UB, Krillin. I think you've all got very good Lom as well. You've all got very good, unique systems, and it's just interesting. I'd probably say my system is very similar to UB's out of all you guys.
Agreed.
Price action ranges, trend lines, channels. So
Yeah.
I'm probably more aligned to UB style than perhaps yours or Krillin's, where you guys are good guys with knowledge of MAs. So good stuff.
Yeah, I'm happy we were able to do this time around. Like Pierre said, if you guys missed it or missed some parts of it, I recorded all of it. I'm going to wrap up the recording here, but thank you to everyone, Bagsy, Pierre, XO, for this conversation. We'll continue to optimize these. Maybe I'll have the chat up in the corner. Right now it was just XO's screen the entire time. But obviously leave your feedback in the comments or in the group, whatever. And I hope you guys found some value out of this live stream. Granted, this is all XO, but again, I hope you guys did find some value out of anything any of us said. Maybe change your perspective a little bit, made you think a little bit deeper into certain topics. So I think it was very beneficial. So thank you, everyone. We'll definitely do this again.
Have a good evening, guys. Take care.
Take care, guys.